So how did I make $220 trading QQQ call options? So on 4/28 at 9:58, but give me one moment, hold on. 9:58 and at 10, so let's look at 9:58. So at 4/28, 9:58, 4/28. There we go. 9:58. This candle right here. So basically on the 10 candle, as soon as I saw QQQ land on the 50-day moving average, I waited for a bounce off the 50-day moving average. Once I saw a bounce off the 50-day moving average, I sold out at 10:05, and when I sold out the position, I made an easy gain of $220 trading just 4 single QQQ call options. So this trade by all means was pretty short, pretty easy. What I'm trying to show you guys today is that once you've mastered your risk tolerance level, you'll basically start getting the hang. You'll start getting the hang of it once you master your risk tolerance level. You know your entry points, your exit points, and that way when you know that it's time to sell, it's time to sell. When it's time to get in, it's time to get in. When it's time to cut your losses, it's time to cut your losses. Face the truth, analyze the chart. So a way that I like analyzing the chart is by, let's see, so take for example of today's chart on the QQQ on the 30-minute time chart, right? Today is May 29th, right? So you can see when QQQ approached the 9-day moving average, it got rejected by the 9-day moving average, and from there it just saw a downwards trend after getting rejected by the 9-day moving average. So what you could have done is that step one, you could have bought a small position of put options once QQQ approached the 9-day moving average, and you patiently wait for a rejection of the 9-day moving average. After the rejection happens, you can patiently wait and see if it reaches your your specific percentage target that you want to reach that day. So if you wanted to reach a 5% gainer, okay, you could have sold out the position for a 5% gainer. If you wanted to sell out for a 10% gainer, okay, that could have happened realistically since it made a huge move to the downside. I'm pretty sure this would have been more like of a maybe a 20-30% gainer, honestly, if you had held all the way to the low of the candle, because the high was 526 and the low was 521. So if you would have held on to that position, you could have made maybe like a 40% gainer. That's only if you were to play like weekly or next weekly options. So but it's all about managing your risk tolerance. It's all about just knowing when to get in, when to get out, and honestly just playing by how you're feeling confident. So for me, right, I would honestly play if I would have played this, right, I would have chosen 6-day options. Yeah, that way I could have had time in case the trade didn't go my way, and if I saw that it didn't get rejected by the 9-day moving average and it broke above the 9-day moving average, I could have cut my losses early, but with a small loss instead of a big loss if I were to play short-term options, options that would expire quickly in a day or 2 days. So basically that's how I would go about it. So let's say right here you got into QQQ options, and once it approached the 9-day moving average and you're waiting for a rejection and it doesn't happen, it breaks the 9-day moving average. So what the next step would be is that I would basically wait for QQQ to approach the 20-day moving average, wait for a rejection. If that does happen, the next My next selling point, the next thing that I would do would basically try to aim for when I would want to sell. So if it approaches the 50-day moving average, okay, I'm gonna sell out as soon as QQQ gets rejected by the 20-day moving average. I'm going to basically wait and see if it can approach the 50-day moving average. Once it lands on the 50-day moving average, I'm selling out the position, move on to the next trade. So that's a way you can manage your risk tolerance level too. So instead of relying on the, where it says 8.30%, so instead of relying on your like, oh, I'm going to try to sell out the position once it reaches, once it's up either 10, 20, 30, 40, etc. percent gainer. Once it's up that percent, I'll sell out the position. You can also manage your risk tolerance level by analyzing the chart, by using the moving averages, like I said. So let's say you buy here on the 9-day moving average, put options as soon as it touched it and QQQ broke through the 9-day moving average. I would buy I would buy more QQQ options, put options, as soon as it touches the 20-day moving average, and basically wait for a rejection by the 20-day moving average. Once that rejection happens, right, I'll basically try to sell out the position after QQQ gets rejected by the 20-day moving average and approaches the 50-day moving average. So that way I know that, okay, that way I know when to sell. That way I'm not stuck in my head like, oh, maybe, I don't know, maybe it could break the 50-day moving average and possibly reach all the way to the 180/200-day moving average. If that scenario doesn't happen, right, and let's say all of a sudden, QQQ makes a sudden U-turn towards the upside, you missed on your potential earnings of selling QQQ put options once it approached the 50-day moving average. So basically try to play it safe in a way. So and let's see, pretty much the whole market is down. So with the news of yesterday of Trump's tariffs being paused, I guess the market was a little mixed because now I guess his tariffs are back somewhat. Some are back. So I think he appealed it. So basically that's pretty much what's going on with the market. Market's a little shaky right now, but pretty much, you want to take advantage when the market is down. That's where most, money makers are to be made, when the market is down. So that's pretty much it. And if you guys want to sign up with my Webull link, sign up with my Webull link located in the description below. Once you deposit $100 or more into your brokerage account, Webull will give you a cash bonus. So that's pretty much it. As always, this is not financial advice. As always, take care and bye.